We are excited that everybody found time to join us. So my name is Donald Kimathi. As Agatha said, I'm the General Manager of Buca at Acorn. And Acorn has been established for over 20 years as a premier developer, operator, and asset manager of the largest rental housing brand in East and Central Africa. In the last 5 years, we have achieved market leadership in the student accommodation sector through our popular brand, Kwetu Student Residences, which are spread all over the Nairobi landscape. So in February 2021, we issued our first student accommodation income REIT in Kenya. And then later in September of 2021, we launched the VUKA platform, providing retail savers and investors with access to credible, regulated real estate-backed investments. So VUKA successfully graduated out of a CMA sandbox, a regulatory sandbox in December 2022, and VUKA is regulated by Capital Markets Authority. So I'll take the next 1 hour to take you through a masterclass on financial planning. Engage, ask questions, stop me where you do not understand, raise your hand, and if possible, get a pen and a piece of paper or take notes on your phone for reference, because I'll mostly speak through the webinar. I'll not be reading from the slides. So from Buca, we say Karibu Sana. Right.
Okay, let's do this.
Thank you very much. I think the question that we all ask every time we have this webinars, or every time we cover various topics. The last series of the webinars we covered in 2022 was on retirement planning, and before that we taught on REITs, and various people ask why, and why do we get to have this webinar? So the first thing is, why are we teaching about financial planning? Because financial planning is about financial freedom. And that matters to each one of us. So financial freedom matters to each one of us. So what is financial freedom? Financial freedom means different things to different people. In its simplest definition, it can mean having freedom to do things without the need for a salary. Okay, it could also mean having enough savings, investments, and cash at hand to afford the lifestyle you want for yourself and family without the need to actively earn an income. So simply put, the freedom to do things you love. So with this background, let's define the two primary types of income. So you'll always hear about active income. So this is income received from a job or a business that you actively participate in. So your day-to-day job, okay? Then you'll also hear about passive income. So this is the idea that you deploy time on money and receive income with no further work. So this includes income from investments. It can also include royalties from art and music, right? So what really is financial planning? So let's look at the two definitions. The first one is the Wealth Tribe definition, and it is gaining an understanding of your financial position. Simply put, gaining an understanding of your financial position. It is also, according to the VUKA definition, it's a procedure of developing a personal roadmap for financial well-being of an individual, right? So let's look at something else, the human life cycle. Okay, and this has a connection to what we are talking about today. So you're born, and between the ages of 1 and 24 years, we call that the foundation stage. At this point, you're a dependent. You're growing, you're eating from your parents, you're going to school, you're wearing clothes, you're someone else's problem. So between the ages of 24 and 30, you're a young adult, and then you become a mature adult between the ages of 30 to 40. Between the ages of 40 to 60, you're a senior adult. At this point, you're spending a bit more because you have kids, family, and all that. And then over the ages, by the time you touch the age of 60, you're a senior citizen. So at this point, you're spending more and not gaining as much from your skills, or what you call human capital. So if you look at those three levels, at one point you're learning, the next point you're earning, and the next point you're spending. Why I tell you this is because it's important for us to understand what will be required of us in terms of financial planning at each one of those stages, and the consequences of ignoring each one of those. Right. Let's look at the 3 stages of financial life cycle. So I'll use this graph to just demonstrate that. I already explained that from ages of 0 to 25, you're a dependent. So at that point, you're someone else's problem, okay? You really don't require, you really do not need a financial plan, or at that point, you do not have an income of your own. However, generally, after that age, there are 3 stages to an individual's financial life cycle, each of which is characterized by different life events. So the first one is capital or wealth accumulation. You look at the left side of the graph. Between ages of 25 and 55 years, just before you retire, here you earn your wealth by training your time for money. So time is literally money. Okay. What are the characteristics of this stage? So investment objective is to accumulate wealth. You have a relatively high risk tolerance, and the reason for that is you can always bounce back. In case you make bad investment decisions, you can always bounce back. Your time horizon is long. You're 24 years. You have just about 35 years before retirement. So you have a long time horizon. Your resources are limited. One, because you're growing a skill, you've gotten into a career, you're developing credibility, you're growing your income before you can get into the money. So resources are limited. The strategy at this stage is predominantly learn how to manage your cash flows via budgeting. And the reason for this is you need to accumulate as much as possible, because subsequently, as you will see, you will require that income. So you have to save regularly and consistently, invest savings. You can touch riskier assets with a potential for growth to increase income and net worth. And like I said, because you have a long investment horizon. Right, so let's look at the second one, the second bit. So the second stage is wealth preservation. This comes between the ages of 55 and 60 years. In this stage, you are approaching retirement. So the focus shifts from growing to safeguarding your wealth to a certain financial security. So what are the characteristics of this stage? As you will see, so investment objective is to preserve wealth because you're not really making much more of it. Your risk tolerance is low to moderate. Again, if you lose money at this point or you make bad decisions between the ages of 55 to 60 years, you do not have much time to recover. And the reason for that, as you'll see, is your skills, or whatever you call human capital, is slowly coming to an end. By the time you're retiring, what you're paid for in terms of human capital will come to an end, and therefore you need to survive on other income streams. So your time horizon is moderate to long. You have accumulated significant resources. That is, if you have been doing financial planning previously, and your income is much higher. So if you look at the typical 24-year-old and the 55-year-old in any organization, the 55-year-old will be earning an inordinately larger amount of income. So the strategy at this point is retirement planning. So you use your human capital at this point, which nears zero at retirement, to build financial capital to provide a secure retirement income. So let's look at the last one, which is the spending or the drawdown phase. In this stage, you live off your wealth, okay, or distribute to others. That is dependent on whether you made wealth in the first place. So the focus here turns to income generation. That is trying to get a steady income to fund your retirement, right? So what do you need to look out for at this stage? So one thing, as you'll all note, is that life expectancy has been rising. This is due to obviously health and technological advancements. And so you have to ensure that you have saved and invested enough so that that money sustains you for the rest of your life. So if you do not have a realistic amount of money invested, you do not have a realistic assets that you've kept aside, then you'll struggle with what our parents and the ones who came before struggled with, which is black tax. So we all are aware that once in a while, for those who grew up in my generation and the generation that came before us, that you have parents who will normally reach out to your relatives once in a while because they're retired, they don't have a job, they need to go to hospital, they'll require you to pay for those fees, they'll require you to send money for certain things at home. So for you to be able to avoid that, then you need to plan properly for your retirement and plan as if you're going to live to 80 or 90. Okay, so let's look at the 4 proven steps to financial planning, right? So the first step, you may take notes if you can. The first step is to determine your current financial status. So a critical aspect of this is proper financial planning is understanding your cash flows, so income and expenses. I will define those, and how the two are linked to your assets and liabilities. So how your income, what you get as a salary or whatever comes in as inflows, and what you spend, less what you spend, which is called expenses, are linked to what you eventually own as assets or what you end up with as debt. So the following are some critical aspects to consider. So let me just define some of them. So income, so that's the first one, or cash inflows. So your income is the sum total of all wages, salaries, profits, interest payments, rent, and other forms of earnings received over a period of time. So income sources can be categorized as one, you can think of it as a salary. There are people who earn salaries. There are other people who get business incomes. You may also earn a dividend income. You can get a capital gains on your investments or assets. You may also earn interest income, okay? If you've invested in instruments that give you interest. You may earn rental income if you have properties or things or assets that you can lease out or rent out. And you can have miscellaneous income. This is income coming from hobbies and all manner of things. So start by listing all your sources of income and the exact amount where possible. So that's a starting point when you're making your financial plan. So the second one that is quite touchy is expenses or cash outflows. So your expenses are all the costs that you incur directly or indirectly, other than those for business or investment purposes. So this include rent. You can think of rent. You have utility bills, you have food, transport, insurance, legal fees, entertainment. So tracking your expenses by checking your M-Pesa statement and bank statement can help you reveal your priorities, as it helps you answer, the usual question of where did my money go, especially after weekends. So there are two basic types of expenses. You have fixed expenses. These are the ones you cannot really change. Okay, this touch on your utility payments, your rent payment if you're living in a certain place, and those ones do not change from time to time. The only way you can change is by going, say, in a house that cost you less rent or something like that. So those ones are fixed expenses. So you also have variable expenses. These ones change from period to period, and those ones can include food, they include entertainment, they include fuel, they include airtime. So these ones you can easily change or stop or reduce, and they're not the same month to month. So the other thing I want us to quickly define is a net cash flow, and I'll tell you why this is important. So net cash flow is the difference between your cash inflows, which is income I've defined, and the outflows, which is expensive. So a positive level of cash flow is a result of spending less, meaning that whatever you're earning, whatever you're spending is less than what you're earning. So if whatever you're earning is less than what you're spending, it means you have a negative cash flow. So these are some of the things we need to watch out for, because then when you have a positive cash flow, if you're spending less than you're earning, then you're able to invest that money, and then eventually accumulate assets. So it is important because it shows your ability to generate cash that you can use to, one, acquire assets, pay off liabilities, and liabilities include things like loans or debt, or build an emergency fund, or, like I said, accumulate assets. So bills don't disappear when cash is not coming or is delayed for some reason. So maintaining a positive level of cash flow is important for surviving, especially during difficult times, and a key ingredient of financial health. So tracking your income and expenses will help you understand your cash flow situation and how it relates to your financial position. So assets, liabilities, and net worth, which I'll define shortly. So if you are going to remember anything after tonight's webinar, is your cash flows, your net cash flow, the difference between what your income is and what your expenditures are. Right. So the other thing I want us to define, which helps you with the first step in making your financial plan, is define what assets are, because a lot of times we define all manner of things as assets, including your car. So what is an asset? An asset is a resource or something useful or valuable. So an asset class is a group of assets with similar characteristics. So let's define some asset classes. So the first one is shares, also called equities or stocks. You have cash. If you have cash in the bank or saved somewhere in your money market, for instance, that's an asset. You can think of things like treasury bills, treasury bonds, and whatever you're holding in whatever forms of savings that you're currently engaged in. Real estate, that's an asset. Think about REITs, real estate investment trust, because that's an asset class which is under alternative investments. Commodities, futures, or financial derivatives. So the first three assets, and I talked about them, so fixed income, securities or bonds, cash, and stocks, are known as traditional investments. The other three are known as alternative investments. So real estate, REITs, commodities, they're generally known as alternative investments. So the other important important concept to think about is defining liabilities. And what are liabilities? Liability is simply a debt or what you owe, okay? And this may include loans, okay? If you have rent arrears, mortgages, credit card bank, balances. So, and this is important because every time you look at your financial plan, you need to understand what your liabilities are versus what your assets are, right? So another thing I'd like us to quickly tackle this evening during this webinar is looking at how to calculate your net worth as you determine your current financial status. So how do you determine your net worth? So when you have a clear understanding of your income, we've already defined what income is, expenses, net cash flow. So that's the difference between what you're earning and what you're spending. Then what you own, the assets, and what you owe, the liabilities, then you can comfortably calculate your net worth. A lot of people usually say, my net worth is this and that, or how do you calculate your net worth? So how do you calculate your net worth? So is your assets less your liabilities is equals to your net worth. It's that simple. The things we've defined in the assets side, okay, basically what you own or things of value that generate an income or grow in value over time, less the things you owe in terms of debt, loans, arrears, and all these things is your net worth. So by understanding the above, you'll have established your current financial status. So that is the first step in the financial planning process. So let's look at the second one. So the second step is to set your financial goal. So a critical aspect of proper financial planning is understanding your cash flow. So income and expenses, and we've mentioned that, and how the two are linked to your asset and liabilities. So if you have negative cash flows, meaning that your expenses are more than your income, chances are you will get into debt. You will take a mobile loan, you will use your credit card in order to cover for the shortfall, meaning that you will get into liabilities or you'll incur liabilities. If the cash flows is positive, meaning that my income is more than what I'm spending or my expenses, it means that I have some money that I can save and accumulate assets with. So financial goals are income, spending, savings, or investment targets you aim for in the management of your money at every stage of your financial life cycle. The accumulation phase, we've defined the three phases, okay? We started by establishing your current financial status because that information would help you set realistic financial goals. So you cannot, for example, set targets on your expenses if you do not know the percent of your income that goes towards expenses. So similarly, you cannot set a savings target if you do not know your savings rate. You cannot set your savings target if your expenses are more than your income. So how do you set financial goals? So that's the next thing. Generally, when you define goals are generally classified into short-term, medium-term, and long-term goals. So if you look at the slide in front of you, short-term goals will be goals less than 5 years, medium-term goals will be goals between 5 and 10 years, and then any goals above 10 years are generally considered to be long-term goals. So an example, and I'd like to encourage you, if you have a piece of paper, to draw those three columns and put some of those goals there. So what would constitute, say, short-term goals? Things like, it will be things. I want to buy a phone. I want to go to Mombasa, in the next 4 or 5 months. Okay, those are short-term goals. I want, if you look at medium-term goals, I want, for instance, to do a wedding in 5 years. I want to start my MBA in 3-4 years after saving for it. Those are medium-term goals. And which are the long-term goals? So this would include wealth accumulation. It would include retirement, okay, because you're planning for retirement long. It would include, for instance, buying a house. If your plan is to save and buy a house in 10 years or invest and buy a house in 10 years. It would include kids' education. A lot of times we do not think about that for people who start families. So kids come and then you have to think about what's going to happen in 5-10 years. So those will be long-term goals. It would include building a home, okay, or buying one. Okay, so you'll find that if you classify your goals in that way, you will find that the bulk of your goals are not really short-term goals, okay? Because a lot of times we plan for short-term goals. I want a new phone. I want to go to Mombasa. So we forget about the long-term goals. You'll find the bulk of the goals, the bulk of the goals that will keep you awake will be the long-term goals, some of the goals we've mentioned, and you can have a laundry list in the 3 columns for yourself to see what are your short-term goals, what are your medium-term goals, and what are your long-term goals. So this simply means if you notice that the bulk of your goals are medium-term to long-term, it simply means you have to apply the relevant investments to relevant goals versus relevant risk appetites for short-term, medium-term, and long-term goals. In terms of how you invest your money in the long-term, short-term, and medium-term, that should be aligned to your short-term, medium-term, and long-term goals. So when setting up goals, you need to think about how far away is the goal. I've defined that in terms of length of time. What's the spending duration? This is the length of time you expect to fund the goal. So for instance, if you're saving a house which is 2 million, how much do you need to set aside every month in order to fund that goal? And then what will be the estimated cost? Okay, very important. The third thing is establish rules to manage your cash flows. So this is determining what percentage of your income that will go into what aspects of your expenditure, saving, and investment. So allocate a percentage of your income to each of your investment goals. So this should reflect your lifestyle and circumstantial changes as you move through the 3 stages that we defined earlier. Right. So the fourth and the final stage is explore investment options available to you. And once you have your financial goals, you then proceed to explore what investments options are available to you. You then match each goal with a suitable investment opportunity of a corresponding time horizon. Sorry about that. So what are some of the investments and savings that you can engage? Once you've established this, you can look at equities. We mentioned some of those. You can look at money markets. You can look at bonds and treasury bills. You'd look at pension plans. You can look at alternatives. So alternatives, we mentioned real estate is one of those, commodities is another. You can look at REITs while establishing what investments options that you get into. Thank you. So one of those investment options is VUKA, and I'd like to quickly define what VUKA is. So VUKA is a CMA-regulated retail aggregation platform which pools investor funds for purchase of units in Acorn student accommodation income REIT. So VUKA is the first of its kind in Africa.
Hi, Donald.
Yes.
Sorry to interrupt you, but then I would like if you could give us an example. So let's say if one of my goals is, like you said, there are some goals you give examples to, like I want to do a wedding in the next 5 years.
Yes.
Or yeah, I want to do a wedding in the next 5 years. I want to have an emergency fund. Yeah, you're back to this slide. Yes. So
yes.
Practicality. Like in a short-term goal in less than 5 years, one that everyone should have in this meeting is having an emergency fund, right? So I have a goal of having an emergency fund. And let's say I want to do a wedding in the next 5 to 10 years. And then in more than 10 years, I want to retire, in properly, right? A comfortable retirement. So can you help us link those goals to investment options, or link them to what you've been talking about, that it becomes practical before we talk about VUKA? Yes.
Right. So every time you talk about goals and investments, I usually start with the reason why you save and invest in the first place. So some people invest because you need an income. And some other people invest because you need capital gains. You need your assets to accumulate. Other people want some cash flows at the end of a particular period in order to meet a certain goal. So, for instance, if you want to build an emergency fund, meaning that if you look at the characteristics of an emergency fund, is that when you get an emergency, it's not going to wait for you to go sell your assets. So liquidity is very important. Okay. When you're investing for that short-term goal, because it's a very short-term goal, you have to think about what kind of investment is going to be quickly available, that I can call it quickly, and 2, it is going to continue giving me an income during that period of time. So for instance, if I was building an emergency fund, I'll start with a savings account, okay? And once I've accumulated a certain amount of money, then I'll push it to a money market fund, because One, a money market fund is liquid. You can call up your money within 48 hours at max. If someone is in hospital and stuff like that. However, if I was saving for a long-term goal, I'm looking to build my house in 10 years, it would not make sense for me to invest this or save in a savings account or a money market fund. One, because it's highly liquid, you might not have the discipline to keep that money for 10 years, okay? By end of 12 months, you probably liquidate and go on holiday. However, I would invest in, say, a bond, okay? Because a bond is medium term to long term. I would also think about investing, for instance, in REITs, okay? And the reason for that is REITs are medium term to long term investments, and they will give you a dividend over time and also capital gain. The other thing is, if I'm investing, for instance, I'm investing for retirement, what happens during retirement? I mentioned that when you get into retirement, your human capital phase has come to an end, and you get into your financial capital phase predominantly, where you're spending what you accumulated. So I'd want an investment that is going to give me, is going to pay me regularly some sort of income, for instance, a dividend, while the investment is appreciating in value over time. So I would probably again put my money, say, in bonds or REITs, and the reason for that is you will get coupons every so often. And then you're able to liquidate your money at some point. However, for instance, if I'm young and I want to invest for a long-term, goal, I would also look at stocks. And the reason for that is stocks are generally long-term. Okay, they may pay dividends or may not, depending on how the company performs, but they gain in value over a long period of time. I don't know if that answers the question, Agatha.
It does. Maybe a follow-up question. Why can't I invest my emergency fund in the stock market? Why money market fund, for example, and why can't I invest my emergency fund? And I'm asking because something that I've seen people do. Why can't I invest my emergency fund in the stock market? Yes.
Right. Thank you for that question. So investments are subject to a couple of things. One is the risk appetite of the investor, okay, how risky is an investment? Two, how liquid are these investments? By liquid, I mean, how quickly can they be converted to cash? And the other thing you need to ask yourself is, what control do you have at the point of, what control of investment do you have at the point that you're exiting? So for instance, if you bought a stock today and that stock cost 10 shillings a share, and 3 months down the line, it's now at 6 shillings, and you have an emergency, it means that you will exit worse off than you invested. It means that you'll get less than what you invested, because stocks are generally medium term to long, they're actually long-term investments. So secondly, it's not a liquid investment. It means that you have to go to your broker, give instructions to sell, and that takes a bit of time. Once they find the price that you like, if at all, they will find the price that you like. And that whole process will take long. So liquidity of an investment is also important. So when you're looking at what investments to allocate to what goals, you need to think of how quickly, how liquid is this investment, and how does this investment work, okay, in the first place? What is the riskiness of this investment? So the other thing, I like giving this as an example. During COVID, our experience was that typically we like investing in land as Kenyans. It's something that is deeply important, and we invest in land. Immediately we get our first job, just before we get married, we all invest in land. So people invested in land in all manner of places, nice places in Nairobi. Then COVID hit, okay? You have a patient in hospital, and this patient requires medical, attention, and money is required at that point. You'll realize if you put your money at that point in land, first of all, land is not giving you, bare land is not giving you any income, okay? The only play is capital gain that is going to gain in value over a period of time. So at that point, if you needed to access your money, okay, and this is the definition of liquidity, you would need to put this land in the market, and that will take you anywhere between 3 to 6 months if you're lucky. And if you're lucky, you will get the value that you invested. So in 3 to 6 months, you will not be able to pay your hospital bills. It means that you'll have a problem. So if I was looking to invest, if I was looking to save for an emergency fund, then I'll not buy a piece of land, because getting that money back will be a problem. So, and that's the reason why we said it's not ideal. It will not be ideal to invest your emergency fund in stocks.
Okay, cool. Then now you can proceed. I needed to ask you those questions so that it can be practical. Yes.
Right.
Now you can proceed.
So and I think the other thing, Agatha, I need to clarify when I said investment horizon, it means the length of time you have to your goal. Okay.
Yes.
That needs to be matched with what sort of investment you're getting into. And as usual, as human beings, we have all these things to help us with discipline. So if you're looking to, for instance, build your home in 5-10 years, and you put this money in your savings account, chances are you will find work for that money in your savings account. Secondly, it will not yield, it will not yield, the right level of income and capital gain, so that in 10 years you'll be struggling with, effects of inflation and the impact it has on you, right?
Yes.
Thank you. I'll proceed if there are no questions, and probably take questions at the end of a session, if that's okay.
Yeah, you can. Yes, you can proceed.
You can also run through the chat and let me know if there are any questions I need to address before we get into the VUKA bit.
There are questions, but please proceed because they are linked to what you're about to present, and then we'll ask the questions.
Correct. So I explained that VUKA is a capital markets authority regulated retail aggregation platform, which pools investor funds for purchase of units in Acorn student accommodation income REIT. So VUKA is the first of its kind in Africa that offers members a unique alternative investment opportunity backed by a portfolio of attractive real estate, the Kwetu student residences. So it's regulated by Capital Markets Authority, so safe and credible investments. I talked about the quality of investments. We all know the Kwetu student residences, or at least the bulk of us know Kwetu student residences. Flexibility. So when you get into VUKA, you can save a little. You can save depending on how much you're able to save. You can save daily, monthly. You can save one-off, depending on your ability, your capability, and how much income you have, and also your needs in life, like I mentioned, and your goals. It's also tech-enabled, meaning that there's no paperwork that you need to fill. It's platform-based. Once you have the invite, or once you click the link, you've onboarded yourself, you start investing. So what makes VUKA stand out, and I'll quickly compare it with a few other investment types. So the first one is affordable because you can invest as little as 216 shillings currently. Okay, you can join for as little as 1,000 shillings. So it's convenient because it's on a platform. There's tax incentives, and I'll explain this because for VUKA invests in the Acorn student income REIT, which are tax-free. Okay, there's no tax on the capital gain. There's no corporate tax on the REIT. There's only 5% withholding tax on the dividend aspect. So if you compare that, and I will do with other investments, you will see why it's tax efficient. It gives you stable income, and there's quality of assets. I mentioned it's fully asset backed by Kwetu student residences. So if you look at rental units, if you buy land and manage to build rental units, first of all, it's not affordable. It's not convenient because of the process you have to go through. There's no tax incentives. However, you get stable income. If you're able to get occupancy in your property, there's quality of assets because you have actual buildings. If you compare that with a plot of land, I mentioned that because we buy a lot of plots of land. The only play you have on your plot of land is that the price is going to go up in the next 5 years. So your only play is capital gain. You do not have stable income, so it doesn't pay you off, regularly. There's no tax incentives, and it's not convenient to own a piece of land. The process you have to go through. It's also not very affordable because you cannot buy a few inches of land. You have to buy defined sizes of land. So if you look at stocks or Nairobi Securities Exchange equities, they're affordable. So they're good sort of investments. They're convenient because you do this through your broker, and there are many platforms where you can do this on online now. There's tax incentives. Does it give you stable income? I mean, you can argue because dividends are not guaranteed for stocks or when you buy shares. However, when you invest in REITs, by law, 80% of ordinary taxable income has to be paid as dividends to investors. So you're assured of regular income at least twice a year. Quality of assets, because companies which are listed in Nairobi Securities Exchange are taken through a thorough process, and therefore they're decent investments. So if you look at insurance investment products, because all of us have touched this, and this was to tie to the last point where you're looking at options of investments. So they're affordable, they're convenient, and you should have it. There's tax incentives, but it does not give you any payout, regular payout. So you do not expect, income, stable income from your investment. And the quality of assets, because these are regulated bodies. If you look at the conventional money market fund, again, which is a good avenue of investing, especially short-term funds, it's affordable, it's convenient. There's no tax incentives because you have to pay 15% withholding tax on your interest that you gain from that. If you compare with REITs, REITs only charge 5% on the dividend aspect. Okay, so it gives you a stable income because they pay interest regularly, and there's quality of assets. Right. So what are the VUKA investment categories? So there's 5 key investment categories for individuals and 1 for chamas. So there's silver, which allows you to invest up to 100,000. Gold allows you to invest up to 200,000. Platinum allows you to invest up to 500,000. Platinum Plus, you can invest up to 1 million shillings. And then there's diamond, which allows an investor to invest up to 2 million shillings. We normally say investment journey is a journey that you start small and invest consistently. So this acts as a guide. It shows you how you grow in your investment, but we normally encourage people to start investing small. I mentioned that you only join VUKA by paying 1,000 shillings, and you can make an investment as little as 216 shillings. So each investment category unlocks your investment capabilities with an opportunity to upgrade from one package to another. Meaning that if I was to start investing in VUKA today, what strategy would I employ from what I've taught in the class? So VUKA invests in REITs, and REITs are medium-term to long-term investments, meaning that I would align it to my 5 to 10-year goals, okay? And this is because investments in real estate require time to gain in terms of capital, and VUKA offers capital gain year on year, apart from the dividends payout, which are given twice a year. So I would align it to my particular goals, the 5 to 10-year goals, so that I'm able to accumulate savings or capital over that period of time. So how do you join? I believe Agatha has shared a URL or a link that you can join in 5 easy steps on the comment section of this webinar. So you'll just require your ID, your telephone number, your email address, and you'll be well on your way to joining VUKA. So I'll take any questions that you may have or the audience has at this point.
Oh, sorry. Okay. I was speaking and I was on mute. Okay, so let's look at the questions. The first one is, can you reinvest the interest on VUKA?
Yes, you can reinvest dividends. It's a dividend payout, it's not interest. So REITs are equity instruments, meaning that you literally own a unit or shares of a REIT. Mm-hmm. So it pays out dividends twice a year, and yes, you can reinvest your dividends in VUKA.
Okay. Where are your offices located in case one wants to visit?
Right. We are based at Acorn House on James Kishuru Road, right next to, right after the Lavington Mall. So you'll see us on the left. Mm-hmm. If you're coming from Wayaki Way, you'll see us on your right if you're coming from the junction side. The building is called Acorn House. We are on 2nd floor.
Yeah. Just if you want to visit Acorn, just type Acorn House on Google Maps. It's very clear. It's not hidden, so you can go there. Abel says, I joined VUKA this month and it has been a dream come true. That is really awesome. Okay, so let me read out the other questions. How do rates generate income and how are dividends paid?
Thank you very much for that question. So when you invest your money in VUKA, you buy units of the REIT, and that REIT is called the income REIT. You're buying into income generating profitable student accommodation, meaning that this student accommodation, these hostels, they receive regular rent payouts from students who live in them. I'm sure a lot of you have seen the Kwetu brand in Hurlingham, next to Strathmore on Thika Road, next to Catholic University. They're spread all over town. So when students pay rent into these properties, you literally own a share of that rent. So that rent is what is usually distributed back to investors because you own a share or a unit of the REIT.
Okay. Somebody is asking about bonds. Kindly enlighten me on what an amortized bond means. Donald, do you want to answer or should I answer that?
I think you can take that, Agatha.
Okay, so when we talk about bond amortization, it's simply like bond amortization is simply how is your bond going to be paid? Let me give a practical example. So Kenyans are usually used to long-term bonds that only have one redemption date. And the redemption date is when your capital, the amount that you invested, is going to be paid out. Sometimes, like the current infrastructure bond, like the March infrastructure bond, it's written 17-year amortized bond. The word amortized there is simply to show that some people who invest less than 1 million are going to be paid in a less amount of time as opposed to the 17 years. So for example, this March infrastructure bond, it's only a 17-year bond for people who invest 1 million and above. People who invest 1 million and less are going to be paid in 10 years. So basically, bond amortization is simply answers the question, when will my capital be paid back? That's simply what it is. Okay, somebody is asking, what if I don't yet have a KRA PIN because they're a student? Will I be able to invest in the Acorn rates?
Sorry, if you can repeat that question, Agatha, sorry.
She's asking, what if I don't yet have a KRA PIN because they're a student? Can I still invest in the Acorn iRight?
Right, and unfortunately, I mean, it's a regulatory requirement. So you require at minimum your national ID and your KRA PIN to invest in Buca. And the reason is that once dividends are paid out, there's that 5% portion which is paid as taxes to the government as withholding taxes. So that would need to have a corresponding taxpayer's number.
Yes, that's true. So just wait it out a little. You'll be able to invest very soon. Somebody think touch a bit on capital gain tax in relation to rates and the other tax implications when it comes to rates. Yes.
Right. Thank you. So I mentioned that REITs are tax efficient investments, and the reason for that is that REITs are the only investments that do not have corporate taxes. They also do not have capital gain taxes, meaning that if you bought a unit at 10 shillings and it moved to 20 shillings, by the time you're selling it, the difference in terms of a gain, 10 shillings will all be your money. Okay, there will be no taxes to that. REITs only charge, are only taxed 5% withholding tax on the dividend portion, which is the return you get twice a year. So compared to, if you compare that to interest yielding investments like your money market fund, if you look at how much you pay, if you look at your money market fund, for instance, you pay 15% withholding tax on whatever interest you make. This is on the entire return. But for REITs, they have two returns. Okay, it has the capital gain and it has the dividend payout. So you don't pay taxes at all on capital gain. You only pay 5% on dividend payout. So it's pretty tax efficient investment, if you ask me.
Okay, and can a foreigner invest in the Acorn iRight?
Yes, foreigners can invest in the Acorn income REIT through VUKA. All you would require is your passport and a KRA PIN.
Okay. Somebody says the only problem they have with VUKA is that the withdrawal with M-Pesa takes 2 to 3 days, and the dividends are made on the platform and not to bank or M-Pesa. Is that clear?
Right. Thank you for that question, and I need to clarify that. I mentioned the different asset classes, the different types of investments. I mentioned and I touched on this because of liquidity or how quickly you can liquidate them. If you look at what you are investing in when you invest into VUKA, you're buying into an instrument which trades at Nairobi Securities Exchange, because our income REIT trades at Nairobi Securities Exchange. So the process will be, once you put your sell order, we have to sell this, we have to offload this instrument at NSC, the unquoted stock block platform. And once we receive the money from the broker, then apply the money to your platform. At that point, then you have the option to withdraw to your M-Pesa or your bank account. This is merely to give the consumers option at the point that they're withdrawing. The other thing, the other thing when you touch on liquidity and when you're investing in REITs, you need to understand that trading of the income REITs happens currently once a month, so on the last day of the month. So if you give your instruction at any point of the month, it's executed on the last day of the month, which is when it's traded at Nairobi Securities Exchange. Then you get your value within 3 working days.
Okay. I hope that's very clear to people attending this call, because I get a lot of DMs on Instagram that somebody placed a sell order on the VUKA platform. Let's say they did it on the 15th and they are yet to get their money back. So just as Donald has said, your sell orders or your buy orders will be executed at the end of the month. So yes, please wait to the end of the month of whichever month you placed your sell or buy order.
And I think linked to that was on what we defined around goals, that there's various types of investments. So if you're looking, for instance, to put your money for an emergency fund, it would make sense to put it in your savings account, or for instance, money market fund, and that goes on and on. And that's why we defined, the various types of goals and why you should align that to the various types of investments.
Yeah, exactly. That's true. That the Acorn I write is a mid-term to long-term investment. So if right now the only money you have between you and quote-unquote brokenness is 5,000 shillings, don't put that money on VUKA. It's better to first start with building an emergency fund where invest that money in a money market fund. And there's somebody who in the comment section who was saying that they'd like to open a money market fund. I can help you open a money market fund for free. Just send me an email. So back to the point. So if 5,000 shillings is the only money you have between you and brokenness, don't put it in the Acorn I write. First build an emergency fund, and then after that you can invest in the Acorn I write as a way to build into your mid-term and long-term investment. Now, how is the VUKA service charge of 3% deducted? Is it deducted from my total investment?
Right. So while investing, like I needed to, like I mentioned, what you're investing in are instruments that are trading in Nairobi Securities Exchange. So you're literally buying, these instruments from the stock exchange. So what happens is that you have to, this goes through a broker. Once you make your order on VUKA, this goes through a broker, and we make the orders from the Nairobi Securities Exchange. So for that reason, when you trade just like stocks or shares, there's usually an amount of, a small percentage that goes to a broker. There's also a small percentage that goes to Nairobi Securities Exchange. So for VUKA, that is 3% when you're either buying or selling. Okay.
When you place a buy order or a sell order, that's when the 3% gets charged.
So it's 3%. Okay. And when is it deducted? This is at the point when you're making the investment, not post the investment. So if you're, for instance, investing 100,000 shillings, or you're buying units for 100,000 shillings, 3% will be 3,000 shillings, which would need to be in the account for you to be able to make that 100,000 shillings investment.
Is the 499 an annual fee part of my investment?
So if you look at the VUKA model, the beauty of it is, and I need to give a bit of a background. If you go to your broker today, you cannot buy the Acorn income REIT. And the reason for that is it has a minimum, okay? Traditionally, okay, you can only buy our kind of REITs with a minimum of 5 million shillings. So the innovation of VUKA was to therefore aggregate the demand, or rather provide opportunities for individual investors like myself, yourself, so that we can invest as little as 215 shillings all the way to 5 million shillings. So that is the whole point of VUKA. It comes to provide the link between you and provide an opportunity which was not previously available to individual investors like myself and yourself.
I like this next question. Farida is asking, is VUKA Sharia compliant? And maybe you can start by explaining to people what does being Sharia compliant mean, and then tell us if you are Sharia compliant.
Thank you very much for that question. I think it's timely. Two things. One is the Acorn income REIT invests in student accommodation. And how do we receive our income? So once you invest in quote student residences, students pay rent into the REIT, and this rent is distributed. So VUKA invests in Sharia compliant REIT, and just this year, the beginning of this year, I shared, Agatha, I shared with you a document showing that our income REIT is Sharia compliant, meaning that it does not pay out or receive interest. So that's a fact. So what we receive is rent, and then what we distribute is rent, and that's why I corrected that we do not receive interest, we pay out dividends. So that's the first thing. Two, we deal in Sharia compliant business, and some of you can look at some of the forbidden businesses in Sharia compliant, touching on alcohol, pork, gambling, that kind of thing. So VUKA is Sharia compliant, and you can invest in VUKA.
Okay, so Farida, they are Sharia compliant. So yes, you can go ahead and invest in VUKA. And if you want to join VUKA and start investing if you're not already, I have shared a link in the chat box that you can use to join. Now let's go on. How safe is this investment? How safe is this investment?
Right. So I think that's a very good question. VUKA was founded in September of 2021, and we got into the regulatory sandbox, meaning that the regulator put us in an environment on their platform to pilot and prove the safety of this product, and to prove that there was demand in the market. And we stayed in the regulatory sandbox for 14 months. At the end of December, for those who've seen news, VUKA was, graduated from the sandbox. VUKA is fully regulated by Capital Markets Authority. And the reason why VUKA is safe is, one, apart from regulation, is that, so that's the first level, that VUKA is regulated. Two, what VUKA invests in is regulated. So because the VUKA invests in the Acorn income REIT, which is also regulated separately by Capital Markets Authority. So it's a pretty safe investment to invest in.
Okay. How has been the performance so far since establishment? You have to share that one.
Right. Thank you very much for that question. I think what I can conclusively say is that in the first year, we paid out a dividend rate of, a total return of 9.4%, okay, which was above industry and which was above target.
And which year was this?
This was, end of 2021. Those are the published results. Okay, so in the next 5 weeks, we'll be publishing results for 2022, and we'll be able to see from that what the performance has been, what the return has been. But in the first year, VUKA performed very, very well.
Okay, 9.4%. Okay, what are the risks of investing in this REIT? You have to serve us both meals. Yeah, you've told us of the advantages, but what are the risks? Yeah.
Thank you. So when you think about investing in rental property, so the first risk, and I'll explain how that is covered, that you need to think about is occupancy. Okay, and occupancy tied into the asset class or the type of property you've invested in. Okay, we all know that there has been a glut, for instance, in commercial properties, malls, offices, and all that stuff. Our REIT invests, and this is the first of its kind in Africa, in student accommodation. And the demand in student accommodation is such that last year we closed our occupancy rate of at above 90%, which is really good. So the biggest risk you need to watch out in any REIT that you invest in anywhere in the world is occupancy. And that is the risk, that there may not be tenants for your type of property. But what we have seen so far is a very high sustained demand. Obviously, on the background of the fact that there's more than 500,000 students graduating every year, okay, coming into the market, and there's only just 40,000 beds in terms of accommodation in Nairobi. So there's a huge gap in student accommodation. Most of you know that because you're going through uni. People have had to stay in far off places in Nairobi West, Rongai, on Thika Road, because there's no accommodation on campus.
Okay, so Brenda, who is an investor of the Acorn IRIT, is saying we still haven't received our dividends yet after December last year. Right. What is going on? Why haven't we received our dividends, Donald?
Thank you. So typically, and this is commonplace for all equity instruments, the requirement by law, because we've closed the year December, is an audit has to be carried out, okay, by the auditor. And once the audit is carried out, you have to announce the results by 31st of each 31st March of each year. So meaning that they allow you 3 months within which to carry out audit to confirm that this is what was received, paid out, and this is done by the auditor. Once that process is completed, the law requires that we announce and publish our results. So publicly announce and publish them in newspapers, and then at that point declare a dividend. So an AGM is going to be called, and then dividends are declared and paid out. So if you look at all companies, if you tell me there's a company which has a single company which has paid dividends, it will not be true, because that's a structure. It's just how the regulations require for that process to go. Yeah.
So for all companies, it's by 31st of March.
By 31st, once you announce your results, then you declare dividends into the REIT.
Yes. So if you're already an investor in VUKA, please don't suspect or don't have cold feet that your money has been stolen. Because there was I know I told people on Instagram that invest so that you're eligible for 2022 dividends. So you had to invest by 31st December in order for you to be eligible for 2022 dividends. And so and that's why Brenda is asking, why haven't you received this dividend? So nobody has stolen your money. It's by law, they have until by 31st.
So by 31st of March, once the results are declared, an AGM will be called, through which dividends will be declared. Then within 30 days, dividends will be paid to your VUKA account.
Yes, and Gideonji is asking, do you share audited accounts with your customers?
Absolutely, those ones are available, and we can. I think we've shared before the audited results for 2021. As soon as the 2022 results are out, we are going to share with the Wealth Tribe as well.
Okay, cool. And when he shares with me those audited accounts, I will share with you, because if you're joining this webinar, it means I have your email, I will share it with you. There are a few people who are asking, for us to give them a breakdown of a hypothetical example, if they invested 10,000 or 100,000. On their website, Buca, they have a calculator, right? They have a calculator, and I will share a link to that calculator where you can go and enter these numbers. So if it's 10,000 that you have and you want to invest and you want to know how much dividends you gain or the return, you can just play around with that calculator, because we won't have enough time to calculate for everyone. Somebody is asking 10,000, somebody is asking 100,000, but we will share that calculator. Does this option apply to non-Ugandans? So you said that a foreigner can invest, right?
A foreigner can invest. The only requirement is a KRA PIN.
Yes, you have to apply for a Kenya Revenue Authority PIN, because tax will be deducted from this investment. So as long as you have a KRA PIN as a foreigner, yes, you can invest. Is there a penalty for withdrawing from VUKA, and what's the withdrawal process?
So there's no penalty for withdrawing from VUKA, because as I mentioned, what you call the investment or withdrawal process is actually buying or selling of a unit. So you can buy those and sell at any point. The only point I needed to make is that REITs, which is what VUKA invests in, are medium-term to long-term investments. So it makes sense if you invested over medium-term to long-term, so you can get benefit, which is regular dividend payout and capital gain before you can sell your investments. So there's no penalty.
Okay, so there's no penalty. Yes. So if 216 is the minimum investment, is there a maximum?
There's no maximum, although on VUKA the maximum investment is 5 million. I explained that VUKA came to aggregate or provide a bridge through which individual investors can get into REITs. And generally, for investors looking to invest 5 million and above, you can actually get the REIT from your broker directly at Nairobi Securities Exchange.
Okay. I don't know. Okay, but okay. So how is VUKA structured in terms of management? Right.
So VUKA is, like I mentioned, is regulated by Capital Markets Authority. It's regulated as an intermediary service provider, meaning that it plays the role of an intermediary, between you and the broker and Nairobi Securities Exchange, because by law, the broker cannot, sell the REIT, they cannot sell our income REIT for less than 5 million shillings. So that's the primary role of VUKA. So VUKA it also has a service provider, has a fund manager who plays a certain role. So which means management of VUKA, the funds that come into VUKA. It also has a custodian bank. So the custodian bank is NCBA. This means that all funds that come into VUKA, when you put your money into VUKA, it goes into NCBA. The custodian plays the role also of a middleman, ensuring that the money that is client's money is VUKA does not have access to that money, except for ensuring that the money is moving from you to NCBA, the custodian, to the broker, to Nairobi Securities Exchange, and you get your units in your account. So that structure ensures ring fencing of customer funds and ensures that there's many other people who are watching to ensure that your investment is safe. And then finally, you have both the VUKA, the VUKA auditor and also the REIT auditor. So at the first level, once the REIT is audited, there's assurance that you know how much has been made, how many units were bought, how much is coming in as capital gain and dividends, and so on and so forth. Then at the very top level, you have the regulator, who's the Capital Markets Authority.
Okay, so there are levels to ensure that your investment
to ring-fence the investor, funds. I think that's a very important question, because a lot of people have asked me in the past, what makes VUKA different from other real estate investments? First of all, this is an indirect real estate investment. Secondly, it's trading at the Nairobi Securities Exchange, meaning that you're not coming to an office to ask for your money. Every time you make that request, it's literally, going to Nairobi Securities Exchange through a broker. So this creates a lot of transparency, because apart from us, there's an SC who know who the investors are. There's a custodian who knows how much is sitting with what investor and has an investor register. And finally, the regulator ensures there's governance processes like audits to ensure that the investor funds are safeguarded.
Okay, that's awesome, because it also answers somebody's question: how do you opt out or liquidate? Just if you're already an investor with VUKA, just go to portal.vuka.co.ke and place a sell order. It's that easy. Somebody wants to know, I think this is a risk question: when there are no students, in case of a risk or a pandemic, for example, will there be a dividend payout?
Right. So I think what has come out clearly is and we experienced this during COVID. Regardless of whether there was a pandemic or not, we saw a sustained demand because of how students typically learn. Okay, the environment at home. Okay, if you're learning from home, you'll be lucky if Thursday is not your day for making chapos or making chapati. There are many distractions because you're probably reading from your bedroom. Secondly, the mode of reading, nowadays encourages communities. You'll do the bulk of your learning through communities, through discussions and all that stuff. What we saw was, apart from the period when the government closed down everything, as soon as schools were reopened, occupancy shot back to normal. And the reason for that is what I said earlier. There's an inordinate demand for our properties, the Kwetu student residences, and for those people who live in to know how hard it is. For instance, if you go to our Wilson View property next to Strathmore, how hard it will be for you to secure a room. Same thing as the one in Hurlingham. So I think the primary driver is the demand for your properties, and that is something that we have ensured. We sustain that demand by ensuring our properties are high quality and they're next to universities or schools that we service.
Okay, so the 5% tax paid on dividends, do I have to file it, or VUKA remit it directly to KRA on my behalf?
I think withholding tax is not that is from my end. Withholding
it's
tax.
It's a final tax. Yes.
Yeah, it's a final tax. So it's normally filed on your behalf. It's actually received. It's actually deducted before you get it on your side.
Yes. Yeah, so you don't have to do the job again. It's a final tax. So withholding tax for VUKA is the same as withholding tax for a money market fund. Don't go and say and like, yes, I invested 100,000 again to KRA, because they will tax you again. So it's a final tax. Leave it as it is. Declare other things. Yeah, declare other things, but not this one. So somebody, if you're joining the meeting late and we've already covered a question, we will upload this recording on the Wealth Tribes YouTube channel. So I'm just trying to make sure that I don't repeat questions, so that we don't take forever on this call. As a small clarification, somebody wants to know, what is the minimum investment for VUKA?
So the minimum units you can buy currently is 10 units. So if you multiply 10 units by 20.88, which is the going price for the REIT, that comes to around 208.8. Then if you apply the 3%, which is what you pay for either buying or selling the units on Nairobi Securities Exchange, it comes to 216 shillings. So that's a minimum you can invest. However, in terms of joining VUKA, because VUKA is an investment club, the minimum you can join with is 1,000 shillings.
Okay, right. So do the dividends vary or are they fixed?
So they're not fixed, and the reason for this is when you invest in the business, I told you, I mentioned how REITs make money. You become a partner, literally. Okay, so you once you invest, you're buying into an income generating property, and once the rent is collected, this is what is distributed. So that will vary from time to time, subject to many factors.
Okay, there's a very heated question here. So the government is planning to tax capital gains. Yes, there's like a new law. How does this affect our profits? Yes, will this affect the Acorn IRIGHT, the new capital gains tax law?
So I mean, I can only comment about what I know, and what I know currently is the government has been spurring or encouraging investments into the real estate sector. And the reason why actually REITs are not taxed is because the whole goal of the government is to ensure that there's affordable housing for students and many other sectors. So taxes are generally tax exempt world over, not just in Kenya. I think what you're talking about is stocks, okay, which are different investment class. But for REITs specifically, there's no capital gains tax, and there's no indication that there's going to be capital gains tax as of now.
Okay, another very important question. If you invest 100,000 on VUKA, the joining fee is 2,499. The annual fee is 799. Service charge is 3,000, right? This comes to a total of 6,200. Can I start again? Have you captured?
Yes.
So if you invest 100,000, the joining fee is 2,499. The annual fee is 799. The service charge is 3,000. This comes to a total of 6,298, which is 6%, or which is already 6% of the invested amount. Transactions, then there are transaction charges, and currently in Kenya, the inflation rate is between 7 to 9%, and that tax hasn't even yet been captured. Is VUKA really a good value for money?
Thank you very much for that question, Fred Wangila. I'd like to clarify. First of all, the whole reason why there's different investment categories is therefore to make it as affordable as possible, depending on someone's capability. So in this case, the example you've given, if you're looking to invest 100,000 shillings, you will be in the silver category, meaning that there's a joining fee of 499 and an annual fee of 499. That's a total of 1,000 shillings, and not
799.
Not 799, and the joining fee is not 2,299. So I need to clarify that. Let me, if you do not mind, I can go. Sorry, let's see if I'm able to go back.
Yeah, you can remove your slides, and so that people can even see you in a better manner when you're answering this question.
Yeah. So just before I remove my slides, I'd like to just don't mind to put this one up so that I clarify the same. So if you look at, to answer your question, if you're investing 100,000 shillings, you'll be in the first category, which you invest up to 100,000 shillings. So you can see the charges. That will be a joining fee of 499 and an annual fee of 499. So joining fee is one-off, meaning that subsequently you'll be paying 499 shillings annually to use the platform. And that brings the cost significantly down. So I needed to clarify that it's not 2,499 and the annual fee is not 799. Yeah.
Okay.
So the other, yes. So that would bring that cost significantly lower than what we've stated here.
Okay. You are getting into affordable housing. Will VUKA investors be given a priority to purchase?
Right. So we have been on a journey the last 5 years, and that journey is well documented in our strategy. And the plan was to start with youth housing, okay, starting with that student housing, targeting the ages of 18 to 25. Starting this year, towards the end of this year, we'll get into a project that will cover young professionals, targeting the ages of 25 to 30, and we'll continue on that journey until we touch, retirement homes. And the reason for this is the demand for housing is huge. Different players have been focusing on different segments. For us, our investments have been data driven, not so much of emotional, but extremely data driven. And our data shows that there's more than 500,000 students who are turning 18 every year, and who are coming to Nairobi for further studies. And there's only 45,000 beds in Nairobi, meaning that there's a huge gap. And we tested this thesis in 2017, and the last 5 years, by the time we're issuing rates, we were clear about what the demand is. So we have just rolled out a second brand, which is an affordable student housing brand called Kejani. In a short while, we'll issue REITs for that specific REITs, allowing VUKA investors to continue also getting other investment opportunities. So we'll continue carrying our investors along as we go on this journey.
Okay. When putting in a sell order, the amount is less than what is invested. Please explain. Are your rental properties depreciating at the markets? These are many questions tied in one.
Right.
When putting in a sell order, the amount is less than what is invested. Please explain.
Right. I would like clarification to that question, but let me take it. I think I understand what the question is. So, if like I explained, once you buy units of the Acorn income REIT and Buca, two things happen. One is there's dividends which are paid out twice a year. Okay, after results are announced in March, so there's a dividend you'll expect by before April, and after results are announced in June, there's a dividend payout you'll expect by end of August or September. The other thing that happens during those two times is valuation. So once valuation occurs, there's what we call capital gains, or the value of your investment goes up. Okay, and that's why it's important when you're investing in a real estate investment that you remember that these are investments that are meant for medium term to long term. Okay, and the reason for that is, just think of a typical. I like giving this example. Today, if you bought a house, okay, that you intend to rent, okay, and you buy it, for instance, for 2 million. This is a studio, somewhere on Wanye Road. You spend 2 million shillings, and then after the first 1 month, when you barely receive the first rent, you decide to sell this property. Chances are you'll be selling this property at costs, and that's the whole essence of investing in REITs, because it's real estate backed, it's rental property. So for the investment to make sense, you would need to align it to your medium term to long term investment goals. So that way, you will have earned dividends, and you will have gotten capital gains, enough to cover whatever cost you may have incurred while setting up the investment. Okay.
James is asking, why are the invites limited to email? I think that's the old process. Yes.
Yes, that's a old process. You have a link here which does not require an email, I believe.
Yeah, so that's the old process, James. So if you want to join VUKA and start investing in the Acorn, I have put a link in the chat box. Will Kejani come into VUKA?
Yes, Kejani will come into VUKA once we issue the Kejani REIT. That has to sit in a separate REIT because it's a separate brand. So, but it will come. It will be available in VUKA as and when the REIT is set up.
What is the relationship with Saiton?
There's no relationship between VUKA and Saiton. Absolutely none.
Okay, all right. Somebody asked, so I have to ask.
Yes.
How long does it take? How long does it take from purchasing units on VUKA to the time it reflects? That one we explained. The sell and buy orders reflect at the end of every month. Yes. So, like that example Marianne is giving, they did their purchase order on 5th of February. By 28th, or is this a leap year? 28th February, yes, your buy order will reflect. When trying to join VUKA, I didn't pay the 998, so they sent me a pay bill and account number. Can I pay the 998 even 2 years from now to the same account number?
Yes, that's possible because you already have your temporary account number, so you'll be able to make a payment and start your investment journey as and when you're ready.
Okay. After joining VUKA, do I choose the properties for my purchase order, or does VUKA automatically choose the properties for me?
So how it works, in the REIT, you cannot have one property, okay? And
Yes.
this is a risk management strategy. So currently, we started the REIT, if you remember, Agatha, with 3 properties. Last year, we added 2 new properties. So we now have 5 properties. So when you're buying into the REIT, you're buying a unit of the 5 properties, a unit in terms of the REIT that has invested in 5 properties. Yeah.
Okay. Somebody says this is for me. This is for you, the Wealth Tribe. Do you have a lesson on the tax system, especially with regard to investment? I do have a few articles on thewealthtribe.com, but one of these days I will invite a tax expert to help us understand these things. How many times a year are dividends paid out, Donald?
They're paid twice a year.
What is the difference between I rights and D rights?
Thank you very much. So the income REIT invests into already completed income generating properties. These are properties which have been built, completed. They have had occupancy of at least 75% for 3 to 6 months. At Acorn, it goes even up until 1 year until we are sure that property is properly stabilized before they are put into the REIT, into the income REIT. So when you're investing into the income REIT, you're investing into an investment which is already income generating. And income REIT is positioned to both individual and institutional investor. However, the development REIT invests in development of properties. That REIT is only available to institutional investors or professional investors. These are people looking to invest above 5 million shillings. So that's a difference. One invests into property development or building of properties, and that is not available to retail investors. It's also not available on VUKA. VUKA only invests into the income REIT.
Does the VUKA calculator factor out the taxes and other charges?
Right. I think we are in the process of updating that calculator. So the one we shared with Agatha takes care of taxes and other costs, but the one on the website is currently being updated. We will provide communication in due course.
Okay, then in that case, I will share with people the Excel sheet that I have, the Excel calculator. Yes, I have the updated calculator I will share. As I said, if we've already covered our questions, I won't repeat because anyway, we are like 4 minutes to the end of this webinar, but the recording will be shared on the Wealth Tribe's YouTube channel, and I'll share a link of the Wealth Tribe YouTube channel so that you can catch the recording there. Now, I think there are a few, like 5 more questions to go. Can you kindly provide the pay bill number for the annual subscription? Everyone has their, or maybe you can answer. We can't provide one pay bill number, right?
Yes. So that one will be deducted from the platform, so you do not require.
Yes. Okay. Now let me go to the questions that were sent on the Q&A section because I've finished with the chat box. How is this VUKA different from a SACCO?
Right. So when you save in your SACCO, I mean, you save as members with the intention of taking out loans. In VUKA, it's an investment club, meaning that it has a structure almost like SACCO, but you put your money and get specific units. This money is invested in the income generating assets, which are Quetta, student residences. So there's a difference because in SACCOs, it's a savings and credit society. When you're investing in VUKA, you're investing in the Acorn income REIT.
Sorry for cutting you short. Please finish.
Sure. Yeah, I'm saying when you're investing in VUKA, you're joining an investment club which invests in Acorn income REITs.
Okay, can a chama join VUKA?
Yes, chamas can and have joined VUKA. We have many chamas which have onboarded themselves on VUKA, and the primary reason for that was a lot of chamas previously used to put all the investments in buying land. And what they realized is that it's not easy to sell. And even when you want to divide, and it's 1 acre, you want to divide it among 20 people, it becomes extremely hard. But the advantages of now chamas, investing in VUKA is that One is it's very easy to ascertain how many units, and and this money can also be liquidated as and when. It's not as hard to liquidate as land. So we have a lot of chamas on board, and yes, we do admit chamas.
Okay, I think this is the final question. Unless someone has a burning question, can one invest in a money market fund in a foreign currency, example USD? Yes. So I usually recommend Sanlam Money Market Fund or CIC Money Market Fund. Yes, they have an option for investing in USD. So if you contact them or if you email me, I can help you set up such an account. Now, people, I think I've gone through all the questions. Please let me know in the chat box if there's a question I have missed, a burning question that I have not answered, so that we leave everyone feeling good about this option. Please ask so that we don't end the webinar before we answer your question. Let me just scroll to see if I've missed. Oh, is VUKA an acronym? Someone has asked this question thrice. Is VUKA an acronym? What is VUKA? What does it mean?
No, VUKA comes from the Swahili word, which means crossing over, kuvuka. Okay.
Yes.
So
yes,
crossing over from illiquid investments into liquid investments. Previously, there were not any options for people who are looking to invest in real estate apart from you buy land or you have enough money to build. Now we are saying there's another option apart from the fact that you need to buy land and build. You can invest in VUKA for as little as 216 shillings and build your investments on that journey.
And just to be clear, if you're in this webinar and you're Kenyan or you've been in Nairobi, while you're driving around Nairobi or when you're in a matatu in Nairobi or when you're walking in Nairobi, have you seen the Kwetu residences? Have you actually seen the Kwetu student residences? If you can tell us in the chat box whether you've actually seen them, because it's very important. We say that seeing is believing, right?
Yes.
Maybe we are talking about something that people have never seen. So please tell us if you've ever seen these Kwetu residences, because the Acorn iRight invests in the Kwetu residences. So when you buy a unit, when you join VUKA and buy a unit, when you say you're buying a unit in the Kwetu residences, that is what you're buying into, physical assets that exist. Yes.
Actually,
that yes.
Agatha, I'll do the Wealth Tribe one better. Okay. So we'd like to organize for a tour for members of a Wealth Tribe to visit Kwetu student residence property, to see and touch, engage with the staff and ask those questions on ground and see if they are fully occupied, the quality of a place, and what students have to say, and why there's a lot of demand in Kwetu student residences. So you need to hold me accountable to that, and we'll arrange for a tour.
There are 135 people in this webinar at this point, and they've had you. So we'll arrange a tour where people actually come and see and actually prove that when you tell them there's 90% occupancy, 90 to 100% occupancy, it actually exists. So yes, people have said in the comment section that they've seen it. So guys, thank you for coming. Yes, this I have shared. Please, before you leave, click the link to my YouTube channel, because that is where I will upload this recording. So if you need to rewatch this, I will upload it there. I have also shared a couple of times the joining link to join VUKA. So please invest, take advantage of this opportunity. If there's any other question I haven't answered, please leave it in the chat box. But as of now, we can say the webinar is officially over. Thank you for joining. I will make sure I'll arrange that tour to the Kwetu residences and hold Donald accountable. Please don't leave if there's a question I haven't answered. If you feel that there's a pressing question about this investment I haven't answered, don't leave. Put it in the chat box. But for now, for the rest, if I have answered your question and you feel satisfied, please, we have ended the webinar. Thank you for attending. Yeah, some people are saying, yes, the tour, please arrange that trip. I'm really excited about that trip. Oh, Donald, we need a tour. People are actually. I have been on the Wilson one near Strathmore and Karen. Yes, that's true. Can we meet Donald? Okay. Donald, stop recording this webinar now that we've ended. But somebody wants to know if they can meet you. Well done. Looking forward to the trip. We'll make it happen. Lillian Mwanda says, yes, I have my 2 sons that stay in 2 of them. Great standards. Oh my God, this is very, very awesome. To see somebody who actually attended this webinar and has had 2 sons who live there. So it's real. Thank you very much. This was insightful. Yes, thank you.